Welcome to Trading Lounge and the Australian Report, and starting with the ASX here on the 1 hour chart. And the ASX is an odd sort of index really, because it's really broken up between the resources and the finance sector, and also it's influenced by, of course, overseas markets, the FTSE and the DAX, and also the US markets as well. So it can be pulled in all sorts of directions at different times. Sometimes it can be under the influence of the finance sector, and sometimes it can be under the influence of the resource sector. We're seeing oil push up quite strongly, so we can see BHP really making a run, and we were talking about BHP last time we spoke as well. Let me just see if I can bring that up here again, as it has moved up quite strongly. Just put it on a daily chart. So we were looking at it the other day. Like, I wasn't, as I mentioned before, I wasn't sure about this particular count in here, but what I could see was that we had a wave 1 and 2 here, and it's pushing higher. So it is, it is moving along. So I can also say that this particular structure here is not finished as 1 and 2 here, and that may be incorrect there. It may be 1 and 2 and then 1 and 2 here, but it's still got its third wave and fourth and fifth to go here. It's still, it's still got further upside there. So how much influence will that have over, over this index here? We're seeing the banks. The banks aren't very strong. We've got a few divs coming up now. We've got the NAB on the 9th and Westpac on the 13th. So they're not really, moving up that strong. So it's appearing that the resource sector, be it the metals or the crude, that has sort of got hold of this now. So it's being, pulled around. I also understand too that where the S&P is and the Nasdaq and so on, and what's driving those sort of stocks as such as well. So here we just need to be a little bit mindful. We were looking for this market to come up to be sort of pulled up to this magnet of 6,000 here, nice strong number, and now we can see it having its correction there. The trouble is, I don't understand this particular structure in here. I can understand that this is a corrective pattern from here down to here as a wave 4, and I can certainly see this as a wave 1 here. We have a nice 5-wave structure in here, and then an A and a B and a C for wave 2. The trouble with the wave 3 here, it does leave us a little bit short compared to wave 1 here. And it also overlaps wave 1 as well. So I've got 2 points there that shouldn't really make this a wave 3 here. So really, we need to sort of move that out of the way really. So then the other point comes in, well, we need to come to the next smaller degree. Do we call this 1 and this 2 here, and then this wave 3 here, and this wave 4 here, and this wave 5 here for a larger wave 3 here, and then we have a wave 4 here. But the problem with this too is that that this wave 3 here looks pretty much the same length, if not sort of shorter than wave 1 here, and it's certainly, this wave 4 here certainly overlaps wave 1 here as well. So that doesn't appear to be the right situation either here. So it does appear that we can be pushing up higher here. So if I can just remove this here, whoops-a-daisy. So if I can take liberty here and say this market's actually stronger than we think in terms of, we'll have to look at this as wave 1 and wave 2 coming back to a nice 50-60% retracement level, and this does appear like a nice strong move here, like a typical of a third wave, doesn't it? So then we would look for the 4th wave here, and then we would look for the 5th wave up here, but that would just leave us with wave 3 here, and then wave 4 over here, and then we'd be looking for wave 5 up here, of wave 3 here, then wave 4 here, and then wave 5 over here, and then we need to bring all these guys up through here, up into this space. So this is the possible correct. This is the possibility of what we're actually looking at here. So 1 and 2 and 3 and 4 and 5 here, then back into fourth and up into fifth and so on. So I mean, that looks the logical count. I'm just going to save that because I think that we should use that as a template. And why fight the trend if it's actually pushing up as well? That's the other reason. So with that in mind, what we really need to look for is trade setups. Now the cash market doesn't look much different from what I've got here. So this wave 4 here, this move down here would be this one here, okay, that wave 4 here and that wave 4 here. So we can see, if I can just bring this across, this is a 15-minute chart. It's a physical market, so doesn't have the futures market in it that trades at night. So we can see we've got 5 waves up here in this first structure here, then our corrective wave. But we can't call this a third wave either here on the cash because it's actually much smaller than this wave 1 here. So it's basically wave 1 and wave 2 here. And then we've got wave 1 up here, and we can call this back for wave 2, but I'm reluctant to call this wave 3 because it's really just the same size as this one here, if not smaller. So I think it's like wave 1 and wave 2, then wave 1 and wave 2 of a smaller degree, and then we've got this third wave in through here. And of course interest rates stayed the same at 1.5. They haven't been changed since I think it's July in 2016. This is still, I mean, all we need to do here really now, I think, is that we know that Wednesday and Thursday are our sort of corrective days and the days that we really need to stay away from stops and so on. We also know too, just drilling in here a little bit too, just why we're here. This is group 2 below here, so 65, 72 and 80. Then we've got, here we've got 10, 20, 30, midpoint 50, then 80, and then we've got, group 2's in here, but I'll leave that. Then we've got 6,100, so this is the first minor level here, so I can just up the ante on that one and put that there. So really, we know that Wednesdays and Thursdays are corrective days. They're not good trading days. Thursday's good for the bear day. Wednesday can Wednesday can normally have a high of a week as well. It normally trades down in the morning and then trades up in the afternoon. So be mindful of that. But I think that if I can just remove that there for a moment. So I think that we'd be looking at some sort of, in this space here, I think we'd be looking at some sort of A, B and C correction in here before we see a move up in here. So I'm thinking that we're going to see a correction. The trend's not going to continue up here unless this becomes two points here that we can work with. The 630 here, 6,030 here, the top of subgroup 1, if that becomes a tested support, then we can trade along from that point. But otherwise, and we're a long way away from that to wait for that. So we should look at trying to figure out what this correction is in this particular space here. So let's sort of do that, I guess, So I think in this case here, we'll just go through to the tick chart here. And in the tick chart here, I've got this as a very conservative situation where we've got the wave 4 here and wave 1 and ABC of 2, that's fine, and wave 1 here and wave 2 here. I've got it as wave 3 and 4 here and then 5 here for the third wave, but I don't think that's the case here, as I mentioned on the hourly chart here. So I'm going to leave it though for the time being because I don't know what it is, and I'd rather sort of have the two possible counts here at this particular stage and work with that. So there's no need to be in bearish mode here either. The first warning sign would be group 2 becoming the retested resistance, and certainly if the midpoint here, the 50, became the retested resistance, well then we'll start looking at bearish counts. But for the time being, we're in a trend to the upside. We're at 6,000. We know we get corrections at large numbers, so we're better off just being chilled about it and focus on the possible corrections with all of this. So I'm just going to go from 100 ticks to 10 ticks and look at this little space in here, and let's sort of see what we've got here. It does appear that from the top here down to this space here we have either wave A or let's just borrow this for a second. I won't put the so it does appear that we've got this to here. Let me just third, fourth, yeah, is pretty much right. And then some sort of, this could be wave 2 here, by the way, as well. So we'll just put that there. We don't want to rule things out. But then we've got here, we've got this little wave 1 here, little wave 2 here. It does look like we've got wave 3 here. I better just double check this. Sorry about this. So wave 3 is becoming a bit short here, and certainly wave 4 is overlapping wave 1 again. But you know, the thing is that I know that when a market drops through somewhere, you know, that retest before it drops down is always the case as well. So in this case here, we've got wave 1 here. Then we'll have wave 1 and 2 and 3 and 4 and 5. I have to take it. No, I am correct at this point. So it's just going to get a bit sort of messy here. So it'll be something like this here. So we could have, copy this here. So we could have the ABC to this area here, and then expect to bounce off the 80 area here. So we could possibly put this in here. We need to see if wave A here, geez, there we go. That would only give us 3 waves down as an ABC here. If we only get 3 waves down here, then there's a couple of things that can happen. The market can just push straight up from that point and continue to the upside, or we'll get a larger flat correction. So the B wave will come back up to roughly here, the 50-60% mark, and then wherever that wave C is down here, then that will come back down to this space here, and we can call this wave 4 here, or as I mentioned before, looking at this as wave 4 of one smaller degree here as well. Not that it makes any difference. Our main goal here really is that I'm figuring that if the market's going to finish, I think this correction is going to be Wednesday and Thursday, okay? And I think our next long trades are Friday and Monday again, but we need to prove that. We need to get the evidence for that. But we're just stuck in this corrective pattern here for the time being. So what you also can do here is that when we do get a low in here, then just grab that top here, find the bottom here, and then find where your 50-60% retracement level is here, wherever that may be. And then you know that you would need to go long, like if this market you know, came down here and then went back up to this point here. If it failed from here, then that's fine. But if it found support on top of the 61.8%, well, then you need to start building in the long trade from that point. Okay, and also too, we've got group 1 here, so we know that we've got 10, 20, and 30, and then we've got the midpoint 50. So the other point here too is support on top of the 30, a tested support, not just popping its head up over it, but you know, actually sitting, you know, gone up, come back, gone up, sit on it, and then use a reference high to go long at that point. That's what you would need. You'd also need that too to go long on the 6,000 here to go up as well. If you wanted to get in early, you need to make sure that's tested support. There's no point in this little move here just popping up here and you going long into that point, because it will only fold back and come back and check it anyway, you know, most of the time. It's always this little pattern here. It's like, you know, landing here, bouncing, the first bounce. You always look for the second bounce. If it's smaller, then you know that you're going to be going down. But in this case, the bounce moves through it, comes back and check it, because it may not fail again here. Do you know what I mean? It can just have this low here, then go back up from that point. So you have to wait. You have to wait for your reference points all the time. And we've got this reference point to work off now as well. But I'd be a bit mindful I'd be very careful about moving down through shorting down at this particular point here. I mean, short trades would normally happen further down here under the 72, because any price action from group 1 to group 2 here really, in my mind, always belongs to the number that it's working with, in 6,000 in this case. So it's just better most times to stand aside while it's, until we can figure out the correction. Once we've got enough information, the correction's matured enough, then we can look for possibilities of building in. But this is the first leg down from the correction, so we need to work out if it's going to be 3 waves or 5 waves. So I think it's a good time to just chill on this for the time being. Alrighty, cheers.